Hello friends, if you own a home and carry homeowners insurance every month, stay with me because what I am about to describe may already be affecting your coverage. Picture this: a storm damages your roof and you file the claim. The insurance company sends you a check for $3,000 on a repair that costs $12,000. Because at some renewal you did not look closely, your policy was quietly converted to something called actual cash value coverage. The gap between that check and the bill came straight out of your savings, and nobody was required to warn you. Or this: a letter arrives saying your coverage will not be renewed because aerial images flagged a condition on your roof. You had no idea your home had been photographed from the air. You have 30 days to find new coverage, and you are learning about the aerial review only now in this letter with no prior notice. If either of those situations would hit your finances in a way you are not prepared for, this video is exactly for you. Today I am covering 5 things, how each of them works, why older homeowners and Medicare Advantage enrollees bear the heaviest impact, and what you can verify today. I am saving the one with the largest financial consequence for number 2 because once you see the math, you will know exactly where your own policy stands. Before we go further, a quick note. This video is made for homeowners and Medicare Advantage enrollees over 65 who want to understand coverage rules that are genuinely easy to misread. Everything I share comes from official guidance, the National Association of Insurance Commissioners, the Centers for Medicare and Medicaid Services, and your State Department of Insurance, and I will name each source as we go. This is educational content only, not personalized insurance, financial, or legal advice, and nothing here is a promise of any specific payout or benefit amount. Before any major decision, talk to a licensed professional who knows your circumstances. I am not a licensed insurance agent or Medicare counselor. What I am is someone who reads the regulatory guidance and translates it into plain language. The companies involved are not required to explain their rules clearly. Subscribe and turn on notifications. Coverage rules change every year, and the people here find out before it costs them. One question before the list: when did you last look at your homeowner's insurance declarations page? Not your bill, your declarations page, the document that tells you what your policy covers. Drop a 1 if you reviewed it this year. Drop a 2 if you have not. Number 5. Multiple major insurance carriers have contracted with third-party aerial imaging companies, businesses that use drone aircraft, manned planes and high-altitude platforms to photograph residential properties on a regular schedule. These systems cover the vast majority of homes, and your property may already have been photographed more than once with no notification sent to you. The images are processed by AI systems that scan for risk indicators, roof condition, debris, granule, loss, overhanging trees, and generate automated recommendations about whether to renew or cancel your coverage. You are typically not told an aerial inspection occurred until a letter arrives demanding repairs or announcing non-renewal. Consumer organizations that monitor insurance industry practices have documented significant AI errors, solar panels flagged as structural damage, tree shadows logged as roof debris, and in one documented case, a cancellation issued based on images of a neighboring address, not the insured home, with the decision initially upheld. Stick around for number 2, the calculation most homeowners have never run on their own policy, and the one that explains why roof age carries such serious financial consequences for anyone living on a fixed income. If you receive a non-renewal notice, most states require between 30 and 60 days of advance notice before it takes effect. Your State Department of Insurance can confirm the exact period. Within that window, request the documentation and images used in the decision in writing. An independent professional inspection that contradicts the insurer's findings can sometimes reverse a non-renewal. If the decision stands, file a formal complaint with your State Department of Insurance. That agency has regulatory authority over these practices. Number 3. Insurance carriers have tightened underwriting requirements around roof age. A 20-year-old roof was previously considered insurable under standard terms. Many carriers have moved that threshold lower. If your roof crosses the new cutoff even with no leaks and a roofer who would certify remaining useful life, some carriers now place it in a category that triggers non-renewal or a coverage modification at renewal. Most people who have owned their home for 2 or 3 decades have a roof in exactly this range. And here is why this matters beyond the renewal letter. The age of your roof is the central input your insurer uses to calculate any future claim payout, and that calculation is number 2. Number 1 follows the same pattern quiet change without prominent notification. According to the Centers for Medicare and Medicaid Services, Medicare Advantage plans may adjust supplemental benefit structures from one plan year to the next. For 2026 millions of enrollees have lost benefits they had the year before over-the-counter allowances. Fitness benefits, meal delivery, and vision allowances have all been cut or reduced across a significant number of plans. These changes arrive each fall in the annual notice of change, and most people do not read it carefully. Write down 3 questions for your plan's member services. What OTC benefit do I have? What fitness benefits are included, and have any of my covered services changed since last year? Before number 4, let me give you a picture that puts all of this in one place. This is an illustrative composite built from patterns documented by organizations that track insurance claims, practices not any single named individual, but a situation documented across many different states and carriers. Consider a 69-year-old retired schoolteacher in the Midwest, a widow on a fixed income who had owned her home for more than 20 years. She received a non-renewal notice citing aerial imaging results. She hired a licensed contractor who confirmed her roof had meaningful remaining useful life. She disputed the decision in writing with her State Department of Insurance. Then a hailstorm hit, and she filed a claim, and that is when she learned that at a renewal she had not reviewed. Carefully, her policy had been converted to actual cash value coverage rather than replacement cost. The payout reflected the depreciated value of the aging roof, not what repair cost. The gap meant drawing down savings reserved for a different emergency. The storm was not the problem. The words on her declarations page she had never read were the problem. Number 4 is what you can do when the private market says no. In every state, there is a program called the Fair Plan, Fair Access to Insurance Requirements, a state-administered program of last resort legally required to provide basic homeowners coverage to people who cannot obtain it through the standard private market. Fair coverage is more limited and more expensive, but it exists as a bridge while you address what caused the private market to decline you. Contact your State Department of Insurance directly. Pause and write down 3 steps. 1. Request the documentation used in any non-renewal decision in writing within your state's notice window. 2. If an independent inspection contradicts the insurer's findings, file a formal complaint with your State Department of Insurance. 3. If private coverage becomes unavailable, ask your State Department of Insurance about the FAIR plan. Number 2, and this is the one I want you to stay for. Most homeowners assume that if their roof is damaged, their insurance pays what it costs to repair it today. That is called replacement cost coverage. What many policies carry instead, especially for older roofs after a renewal modification, the policyholder may not have noticed is actual cash value coverage. The difference between those 2 phrases is the difference between being made whole and covering an $8,000 gap directly from your own savings on a fixed income. Here is how actual cash value is calculated. Write this down. Your insurer does not pay what repair costs today. They pay what your roof was worth at the time of the damage after accounting for depreciation. Depreciation equals the roof's age divided by its estimated total useful life. Here is a concrete illustrative example. A repair costs $12,000. Your roof is 18 years old and the insurer estimates its useful life at 25 years. 18 divided by 25 equals 72%, meaning the insurer calculates your roof has consumed 72% of its value. Your actual cash value payout is approximately $3,300 before your deductible. Deductibles frequently run between $1,000 and $2,000 or more, meaning the real out-of-pocket gap could reach $8,000 or higher. On a fixed income, that is a crisis. The National Association of Insurance Commissioners advises 2 steps. First, pull your declarations page and look for the words replacement cost or actual cash value in the section covering your roof. If it says actual cash value, that is the coverage type where a major claim pays only a fraction of what repair actually costs. Second, call your agent and ask 2 questions directly. Is my roof covered at replacement cost or actual cash value? And are there any age-based exclusions on my current policy? According to the National Association of Insurance Commissioners, those 2 questions are the foundation of knowing what your policy does when a claim is filed. If you found out today that your roof is covered at actual cash value rather than replacement cost, would that change what you do at your next renewal? Drop a comment below and let me know. I read every one of them. Here is the full picture. Aerial imaging programs are operating on homes across the country without homeowner notification, and AI-based decisions have documented errors. Home age thresholds have shifted and roofs in the 20-year range are landing in the affected category. Medicare Advantage supplemental benefits have been quietly reduced in 2026 over-the-counter allowances, fitness meal delivery and vision, without prominent notice to millions of enrollees. The FAIR Plan is a legal safety net in every state through your state Department of Insurance. And the actual cash value calculation is why 2 words on your declarations page are the most important thing to verify today. 3 things before you close this video. 3, pull your declarations page and find the words replacement cost or actual cash value in the section covering your roof. If you cannot find it, call your agent and ask the 2 questions directly. 2, if you are on a Medicare Advantage plan, call Member Services and ask about your over-the-counter benefit fitness coverage and whether any covered services changed since last year. 1, if you received a non-renewal notice or cannot find private coverage, contact your state Department of Insurance and ask about the FAIR Plan in your state. Before any major coverage decision, talk to a licensed professional who knows your situation. If what you learned today would help someone, share this video with them. The people who most need it are homeowners who have not reviewed their policy in years, and Medicare Advantage enrollees who assumed their plan was unchanged. One conversation before the damage arrives changes everything. Coming up next on this channel, the Medicare Advantage open enrollment window and what it takes to switch to a plan that covers what you need. If you missed the depreciation math at number 2, go back to the 9-minute mark. That is the calculation that tells you exactly where your own policy stands today.